A wonderful good day, ladies and gentlemen. Welcome to the BDSwiss Trading Academy. My name is Alex Duadari, and I'm your host for today's NFP trading session. Actually, the U.S. employment report. Always do first Friday of every month, and it's been a little bit more interesting this time around than the last time, or actually last time around was also pretty interesting. That's why it is very interesting this time around as well. So what's the point? The point is last time we had quite a negative NFP. In fact, we had a negative number. We had 33,000 jobs lost. So the non-farm payrolls, what it is a employment report that helps us understand how the U.S. job market, the labor market, is doing. Labor markets are very important simply because the labor force is the basis of the whole economy. People don't work, people don't make money, people don't consume. So obviously work is very important. I guess you guys work as well. I do work right now, right here, for example. No, joking aside, the last time around, we had still the issues of the hurricanes out of the U.S. that had a big impact. And when we look at the, let's just look at the table. The table is a little bit easier to look at. So we had an expectation of 90,000 jobs. That means 90,000 jobs created from the month before to that month. In fact, it was a loss of 33,000 jobs, so that was kind of negative. But you can see that the actual number of the labor market in the U.S. is quite strong. That's also one of the reasons why the Fed was so aggressive with hiking interest rates in the beginning of the year, because I mean, look at these numbers. We had January 227,000, 235,000. Okay, then we had the first slump. But then the numbers overall, they continue to be strong. So today's number is actually, yeah, I would say out of this world a little bit. It's 310,000 because it should include making up for the bad hurricane season. So a lot of eyes on this very number just today. And when we look at the US dollar in general, for example, if we look at the dollar index here, just 1 second, we see we're at around 94.60, which is pretty positive, in fact. I mean, if we look at the daily chart, you can see that the dollar has been regaining some strength since September. All year long, it was sold off massively, the dollar, against. Basically, the dollar index is an index of the US dollar against a number of currencies. Euro, pound, a couple others as well. So you see the dollar is generally a bit on a run here. It has been showing signs of coming back. And in fact, you can see that in the euro dollar chart as well, which has been gaining all year long and just recently spiked, or peaked rather, in the beginning of September. And since then, it's been a ride downside. Same last week we had the ECB meeting, and Mario Draghi was quite dovish. A lot of bulls had their hopes for a more hawkish leaning rhetoric from the ECB.